All right, so task number 5. This is also this question from the your finance paper from the level 2, and this task is all about like your CSR, that is corporate social responsibility. Let's talk a little bit about the CSR, that is corporate social responsibility. The corporate social responsibility is the responsibility beyond the company's financial return. So, for example, when we run a business, when we have a company, the main purpose of the business to make a profit. So, the main purpose of a company to make the profit, but the company have some other responsibility for the society, as the company run their business in the society and make a sales to the customer and in the community. So the company feel they have some responsibility toward the customer. So nowadays the corporate social responsibility become really popular, and everyone try to do something for the community. For example, Tesco, they do save the children, and Asda, they do UNICEF. So everyone try to do some um, social work. Everyone try to show they are trying to help the community, like Tesco do cancer research. So there's a lot of thing they try to do. Some companies said we don't use the plastic, we use only the recyclable bags. So everyone try to do something for the community, and this is part of the corporate social responsibility. And nowadays when they prepare their presentation, or when they prepare the annual report, every company try to put their corporate social responsibility, and they try to show how they help the community. Now of course, like it is not something the mandatory, there is no regulation, there is no law that you have to do some sort of work that is relevant to the corporate social responsibility, but it's kind of add some value to the people who buy some product from you. For example, if you buy from Tesco, and if they said every time you buy from Tesco, we give some donation to the Cancer Research UK, we give some donation to the charity, we give some money to save the children, so you feel better, like okay, they're doing some good work. So this is basically corporate social responsibility. Now there is a lot of thing company do. Some companies said we don't use the diesel car, we don't use the petrol car, all of our staff go to office or come to home by using the electric car, so they use the inner energy efficient thing. So all of this is part of the corporate social responsibilities. So let's read this question. Let's have a look what we have here. Task number 5 for 12 marks. It says SCM product is committed to improving its corporate social responsibility (CSR) activities. You are part of a team that has been asked to assist in the preparation of an annual report detailing the corporate social responsibility initiative planned. Okay, drag 3 appropriate initiative into each section of the corporate social responsibility report below. That's for the 6 marks. Let's have a look what we have. So we have two sections. The first one, corporate social responsibility report, our commitment to minimizing the environmental impact on our activities. So the first one is for the environmental impact. So we'll not do anything that have an environmental impact. For example, we don't use the plastic bag, we don't use the oil, we don't throw the oil into the sea. So we don't do anything that basically have impact on the environment. For example, we don't use the black smoke that pollute the environment. So this type of thing is come under the environmental impact. Then plan initiative plan, what will be here. The next one we have our commitment to improving the welfare of our employees. So how could we improve the employees welfare? For example, we support them more, so the way we can improve their lifestyle. So this is basically come under the welfare of the employees. All right, so first we do for the environmental, then we do for the employee welfare, and they give us some sort of information we have to pick from here, and we have to drag and drop on the appropriate box. So they said like three, pick three, drag three for the environmental, drag three for the welfare. Okay, so let's have a look which one is relevant to the environmental. So let's read from the first one. The first one it says ensuring staff use public transport rather than their own vehicle when travel for business purpose. So when they travel from one place to another place, rather than using the private car, they use the public transport. So obviously, for example, let's say in one office we have a 10 employee, and if everyone try to travel from one place to another place, and if they take of their own car, their private car. So the 10 car will go from one place to another place. But if they use the public transport, so 10 people can go at the same time. So that is obviously comes under the environmental, because if 10 car go, that will pollute the environment, or that will obviously not will be the energy saving. So from that point of view, that will help the environment if 10 people go together rather than they use their individual car. So I would say this is for the environmental, number one, environmental, number one. Then the next one we have ensuring production process maximize energy consumption. So obviously this is with the production. So production maximize the energy uh, consumption. So if the production process maximize the energy consumption, this is not environmental friendly, isn't it? So we have to find something that is minimize the energy consumption, not maximize. So I would say no, this is not environmental friendly. Ensuring all staff minimize cost and expense to the organization. So this is basically the cost effectiveness. So they will reduce the cost for the company, but that will not help the environment. So I'll say it's not for the environment. Then we have introducing flexible working condition to staff can work and still meet the personal commitment. That is basically the welfare, number two, welfare. Not the environmental, but is the next one, welfare. Then we have ensuring all staff complete overtime each month. This is not environmental, this is not welfare. So we'll move to the next one. The next one we can see, the next one we have imposing a weekend working requirement for all staff. So if you impose weekend working requirement for all staff, that's not welfare, isn't it? You're forcing employee to come to work on the weekend, so it's not helpful for the staff. Increasing senior management salary by 10%. So you only increase the salary for the senior management, so that's not helpful for the employee welfare. Offering free membership to a local gym for all staff. So you offering the free gym membership for all of your staff. This is staff welfare. So I would say staff welfare too. Then we have ensuring emission from our delivery vehicle are minimized. So this is environment friendly, isn't it? We'll make sure the vehicle we use that is not very harmful for the environment. So we said, okay, this is environmental too. Allowing staff to complete overseas project which bring water to community in developed countries. So allowing staff to complete overseas projects which bring water to community in developing countries. This is actually not like staff welfare or environment friendly now. So I would say no, it's not the one. Then we have installing energy saving equipment in our production plan. So we'll install energy saving equipment in our production plan. So that will save some energy. This is environment friendly. So it is environment. Number 3. And finally, we have offering staff training and supporting those wishing to gain further qualification. So that's it. That's staff welfare. Number 3. So we'll offer some training and supporting those like to gain further qualification. So we said yes, this is basically our staff welfare. So we have something for the environment. So we pick this for the environment, and we have some for the staff welfare. So we'll choose that for the staff welfare. All right. So we move to the next section. On the next section, we have in the line with a previous commitment to improving the local environment. SCM Product recently held an event to raise funds to renovate a local community center. The CSR team is responsible for reporting on the cost of the event. All right. So we have a budget. So you can see the budget is for the food 1.75 per person. So £1 75 pence per person for the food. For the entertainment, 50 per 100 people. So if there is 100 people, the cost will be £50. 1,500 people attended in the event. The actual costs are shown in the table below, and you have been asked to complete this with the budgeted cost. So basically, we're going to find the variance analysis. So the variance analysis is the difference between the budget and the actual. For example, my plan was for my holiday, I'm going to spend £1,000. So if I spend more than 1,000, so my actual, for example, is 1,200. My plan was 1,000. I spent 1,200. So I spent 200 more. So that is the adverse variance because I have spent it more than the plan. If I spend it only 800, so I save 200, that will be favorable. So if my cost is more than budgeted, that's adverse variance. If my cost is less than the budgeted, that is favorable variance. So let's find it out. What was my plan, the budget? So I can see we said 175 per person for 1,500 people. So for the food, we have 1,500 people. So 1,500 times 1.75. That will give me how much is the total I had a plan for the food cost. So 1,500 times 1.75, and that gives me 2,625. Okay, so that was the plan, like how much we're going to spend for the food. And for the entertainment, 50 per 100 people. So for the entertainment, so we have 1,500 people, and we need to divide by 100 because they said £50 for 100 people, and we'll multiply by 50. So let's find it out how much it is. 1,500 divide 100 times 50, that gives me 750. That is the budget I have for the entertainment. So for the food, I have a plan to spend 2,625, and for the entertainment, I have a plan to spend 750. So now I will check actually how much I spent on the report. So how much I actually spent. So I can see my budget for the food was, let's say, 2,625, and for the entertainment, my plan was to spend 750. So for the food, my plan was to spend 2,625 pound, but only I have spent it 2,200. That means I have spent it less. And if I have spent it less, so I save some money. And if I save some money, that is good for me. And good means favorable. So I find the difference, the budgeted and the actual. The difference is 425. And this is a good for me, so I'm going to pick favorable because I have spent it less than my budgeted. Then for the entertainment, my plan was to spend 750, but actually I spent 1150. So I spent more than the budgeted. So the difference here is 400. And this time I have spent it more than the plan. So obviously this 400 will be adverse because I have spent it 1150, but my plan was only 750. So if I have spent it more than my plan, obviously that is bad for me and that's adverse. So good is the favorable, and if it is bad is the adverse. So bad is happen when I have spent more than the plan, and good when I spend less than the plan. All right, so this is the variance analysis. Let's move to the next task. We have task 6. This one we have for 24 marks. Let's read this question. Your manager at SCM product is interested in how cost behave at different level of output. So when they said cost behave at different levels, that means like we have a fixed cost, we have a variable cost, and we have a step cost, we have a mixed cost, so we have different type of cost, and how it behave. That means like when the unit is changed, is that cost is still remain same? This is the main point they're going to ask here, because the fixed cost remains same. For example, if we take an office and the office rent is £1000, now it doesn't matter if I open the office or if I don't open the office, I have to pay the rent anyway. For example, if I hire a big production center and where I'm making the pen, so if I make one pen, the rent is 10,000. If I make 10,000 pen, the rent will be still 10,000. So obviously that will be the difference. So if this is the difference, like we need to see what is how we're going to calculate that. So let's have a look this question we have. So we have, she has asked you to prepare a cost analysis at different level of the output for a product. You are told that fixed costs are 20,000 and variable costs are 5 per unit. So you are told that fixed costs are 20,000 and variable costs are 5. So we have to complete the table. Complete the table below to show fixed, variable, total, and the unit cost for each of the three levels. So we have a fixed cost, we have a variable cost, and the total cost. And we have to see how can we calculate that. So the first one you can see here, the fixed cost. Now fixed cost is the cost is remain same. Doesn't matter the level of activity. If I make something, if I don't make something, the fixed costs remain same. So let's say they said she has asked you to prepare a cost analysis at different level of the output for a product. You are told that fixed cost 20,000 and variable cost 5 per unit. So if I make one unit, the variable cost is £5, but fixed cost is same. So we have a three type of level of output. Number one, 2000 unit. Number two, 5000 unit. And number three, 8000 unit. Let's do the workings. So let's do for the 2000 unit first. So write it down, one for the 2000 units. So you have a two types of cost. One is variable and one is fixed. So for 2000 unit, 2000 times 5, and that gives me total 10,000 variable cost, and the fixed cost is fixed anyway. So the fixed cost is 20,000. So my total cost become 30,000. And how much will be the cost per unit? So we have a 2000 unit. So we said cost per unit. So divide by 2000. That will give me 15 per unit. So if I only make 2000 unit, my cost will be 15 per unit. So 10,000 will be the variable cost because 2000 unit and per unit is 5. So 2000 times 5, 10,000 is the variable cost. Fixed cost is the fixed anyway, it will not change. So 10 plus 20 is 30,000, and that's my total cost. And I make 2000 unit. So if I divide by 2000, per unit cost will be 15. Number two, what if I make 5,000 unit? So 5,000 times 5, so that gives me 25,000 variable cost. After that, I'm going to add the fixed cost. Fixed cost is same anyway, that is 20,000. So 20 plus 25, that gives me 45,000 total cost. And I'm going to divide by number of unit. So number of unit, that is 5,000. So 45,000 divide 5,000, that gives me 9 per unit. And finally, number 3, if I make 8,000 unit, what will happen if I make 8,000 unit? So the variable cost, that is per unit 5, 8,000 times 5, that gives me 40,000 for the variable cost. And I'm going to make the fixed cost. The fixed cost, we have 20,000 fixed. So that gives me total 60,000. And if I divide by the number of unit, that is 8,000. So that gives me 7.5 per unit. So I'm going to write the same thing here for the 2000. The fixed cost remain fixed. So fixed cost is fixed. I don't have to worry about it. 20,000. Doesn't matter how many unit I make. The fixed cost is fixed. So fixed costs remain fixed. The variable cost for the 2000 unit, that is 10,000. Variable cost for the 5,000 units, that is 25,000. And variable cost for the 8,000 units, that is 40,000. And the total cost is fixed plus variable, so that gives me 30,000. Then here it is 45,000. And for the 8,000 unit, the total cost we have 60,000. The workings we already done before, but still we are doing. Now the unit cost, so total cost is 30,000. If I divide by 2,000, that we have done before as well, that gives me 15 per unit. Then this one will give us 9 per unit. This one is 7.5 per unit. So what you understand from here, if we make more unit, the cost per unit is going down. When I make only 2000 unit, you can see the cost per unit cost is 15. When I make 5000 unit, the cost per unit is 9, is going down. When I make 8000 unit, the cost per unit only 7.5. That means if I make more unit, so fixed cost per unit will decrease. The reason is, if I make only 2000 unit, my rent is still 20,000. If I make 8000 unit, my rent is still 20,000. So if I make more and more unit, what will happen? So per unit cost will decrease. So remember this one, fixed costs remain fixed in total but decrease per unit. So if I make more unit, my cost per unit will be decrease. All right, so this is the first part. Let's look at the next part we have. The next part, little bit theoretical. They said an explanation of what is fixed cost and what is variable cost. So they're asking the definition of the fixed cost and the variable cost. Let's write it down a little bit about the fixed cost and the variable cost. So we have the fixed cost, fixed cost. So we will say fixed costs remain fixed in total. So fixed cost remain fixed in total or not change because of the activity level, but decrease per unit. So that means fixed costs remain fixed in total but decrease per unit. So if the unit level is increased, if I make more unit, the fixed cost per unit will be decreased. On the other hand, we have a variable cost. Variable cost. So variable cost is change in relation to the level of output. So if I have more unit, the cost will be more. If I have a less unit, the cost will be less. For the fixed cost, the common example is a rent. For the variable cost, common example is direct labor, direct materials. If I make something, there will be cost. If I don't make anything, there will be no cost. So variable cost, the cost change with the activity level. Activity level means output or level of output. Level of output. Level of output means the number of unit you make. So if you make more unit, the variable cost will be more. If I make less unit, the variable cost will be less. If I don't make anything, my variable cost will be zero. So fixed costs do not change with the activity level, but the variable cost change with the activity level. The common example for the variable cost is labor, direct labor or direct material. That's it. So this is the difference between the fixed cost and the variable cost. So this task 7 we have, this task is about the purchase daybook. It's quite easy and a straightforward question. So let's have a look what we have here. They said you are preparing for the accounting month at SCM product. Your first task is to transfer the data from the purchase daybook to the ledger. An extract from the purchase daybook is shown below. Now, the purchase daybook is the book of prime entry. Purchase daybook is the book where we record something at first time. So purchase daybook is the book of prime entry. So that means if I make a purchase, what type of purchase? Credit purchase, not the cash. Remember that. Only the credit purchase. So when I make a credit purchase, I record it on the purchase daybook. Only the credit purchase. Only credit purchase, because if I make cash purchase, it will go to the cash book. If I make a cash purchase, I don't have to record on the purchase day book, only the credit purchase. Now what does that mean, the credit purchase? Credit purchase means I buy something now and I'll pay you later. For example, I said I will buy today by spending £500 from you, so let's buy something from you and I'll pay you after 1 or 2 months. So for any reason, if I said I'll pay you later, this is called credit purchase. And the credit purchase create the liability, because if I said I'll pay you later, that means I'm creating a liability because I have to pay for that. If I buy something from you, I cannot say I'm not going to pay for that. So I will say I'll pay you later. So as soon as I said I'll pay you later, I'm creating a liability, and this liability obviously is a credit because it's a liability. So we have a purchase day book. On the purchase day book, all these people I can see here, they are my supplier. Inside of the purchase day book, I only record the credit purchase. So I buy from you, and I purchase on credit. So if I purchase on credit, I record on the purchase day book, and every single people I see here, they are my supplier. What type of supplier? Credit supplier. Now I buy something from this person, Car Strayer Limited, and I can see this is the invoice number. Total I have purchased 474, VAT 79, and net is 395. So I'm creating a liability for that. So the question is asking, show whether the entries in the general ledger will be debit or credit. It's very simple, because if I buy something, it's expense for me. So I purchased for £395. So that's expense for me. So purchase is always expense, and expense is always debit. So I'm going to say 395 is a debit because I have purchased that from the supplier. So it's expense. When I purchase something, I have to pay the VAT. So VAT will be treated as expense as well. So either you can say the VAT is expense, or you can say like it will reduce your liability. The same story. It is input VAT. So obviously VAT will be treated as expense. So that will be also debit 79. And because of the purchase, I have to pay this money to this person. So I'm creating a liability. And this liability is called purchase ledger control. This is called purchase ledger control, the total amount. This is the money I have to pay to that supplier, 474. This is the money I have to pay to the supplier because I make a credit purchase. So purchase is a debit because it's expense. VAT is also debit because I pay the VAT when I buy something, is also expense. And because of the credit purchase, I'm creating the liability because I have to pay this money in future. So that's my liability. And if it is a liability, that's my credit. So I'm going to pay total £474 because for the purchase 395 because of the VAT 79. All right, so this is the one. The next one we have here. What will be the entry in the purchase ledger? Now we know the difference between the purchase ledger and the purchase ledger control, isn't it? The purchase ledger is for only one supplier, is individual ledger or subsidiary ledger. It's a subsidiary ledger. Purchase ledger, sales ledger is a subsidiary ledger. That means when you talk about only one person, for example, one customer, one supplier, then we talk about purchase ledger or sales ledger. So when you talk about individual customer or individual supplier, we said this is a subsidiary ledger, that is purchase ledger and the sales ledger. But when we talk about all the customer, total customer balance or total supplier balance, we called it purchase ledger control or sales ledger control. So this is purchase ledger control, the total balance, and this is the general ledger. So they are asking for the purchase ledger, not the purchase ledger control. So individual supplier, only one supplier. So we know who is our supplier. This is the one. So I'm going to write his name, Car Stairs. So Car Stairs Limited. The amount is the total amount that I have to pay to this person. Remember, we always pay with the VAT, and that's my liability as a credit. We always pay to the supplier with the VAT. I cannot tell my supplier, okay, I'm going to pay only for the purchase, I'm going to pay VAT to myself to HMRC. No, I cannot say it. I will pay with the VAT. He will pay the VAT separately to HMRC. For example, if we go to Tesco and if we buy something, we cannot say, just take your money, don't charge for the VAT. I'm going to pay VAT separately to HMRC. It's not going to work. We have to pay the VAT with that. So we pay with the VAT. So every time if you do purchase ledger or purchase ledger control, you take the amount with the VAT. All right, so let's move to the next section. The next section we have here, that is for the error and the correction. Let's have a look this one. So we have the question. The question is said, you have found an error. You have found an error in the accounting records. A check payment 4206 to a credit supply has been recorded this. So basically you make a payment by check. So we paid a check to someone 4206. So we paid to a supplier 4206 pound, but has been recorded 4260. So I said I paid more. That's wrong, isn't it? So this is the right one and this is the wrong one. So I have to remove this one, the wrong one, and record the right one, 4206. You have partially prepared the trial balance and obviously like a journal to correct the error in the general ledger. Okay. So what they are asking, complete the journal below, removing the incorrect entries. So which one is incorrect? This is the incorrect, 4260. And the correct one will be 4206. And recording the correct one. Okay, so let's remove the incorrect one. So I'm going to say bank 4206 debit and purchase ledger control 4206 credit. Now how I remove it, if you remember your journal, to make a payment. So payment to credit supplier. So the journal for the payment to credit supplier is purchase ledger control debit and bank is credit because money is going from the bank, isn't it? So purchase ledger control is debit, bank is credit. So purchase ledger control is debit because it will reduce the liability. If I pay to my supplier, normally purchase ledger control is a credit, isn't it? But if I want to reduce it because I paid the money, so I'll make it debit, and money will go from the bank if I paid to my supplier. So bank will be reduced, so bank will be credit. But as I made a mistake, I do opposite. So I want to remove it, so I do opposite. I said purchase ledger control credit, bank is a debit. So if I do opposite entry, so that will be cross. So purchase ledger control was debit, I make it credit now, so it will be gone. And bank was credit, I make it bank debit now, so it will be also gone. So now there is nothing on the system. I just remove the incorrect because I made a mistake. I remove it. If I like to remove something, I do the opposite entry. For example, bank is a debit. If I want to remove the bank, I said bank is a credit because debit and credit like a plus and minus, it will be gone. So as soon as I write the opposite entry, it will be gone. The next one is a record the correct entry. The correct entry is 4206. 4260 is the wrong one, isn't it? So I wrote the wrong figure here. So it will be bank should be 4260. That's my incorrect figure. That's my correct figure. 4260. So that is gone now from the system, and I record the correct one. So I said purchase ledger control, that is debit 4206 and bank credit 4206. So now I record the correct one. So the incorrect one is gone, correct one is in the system. So it's a very important, you have to understand that. So you need to correct your old mistake. So if there is an old mistake, how you correct it? You do the reverse journal, you do the opposite journal. So if something was credit, you make it debit, it will be gone. Something was credit, make it debit, it will be gone. The next part we have, it says you have also identified that discount received were omitted from the general ledger. You have prepared the journal entries below to correct the emotion for the omission. So omission means you completely forget something. Omission means is completely forgot. It's not a mistake, you forget something. If you forget something, all you need to do, you need to just record. So the journal here, purchase ledger control is a debit and discount receive is a credit. Okay. So they said record the journal in the general ledger. We know how to do it. It's not difficult. So all you need to do, we need to do the opposite entry. So we said this is the discount receive account. So discount receive we can see is a credit. So my pen will be on the credit side. As the discount receive is a credit and I am on the discount receive account, so it's a credit. So I'm writing on the credit side because this side is a debit side, this side is a credit side. So I'm writing on the credit side, but I'm going to write the opposite. Remember, we never write the account holder name inside of the account. This account belongs to discount receive. We'll never write discount receive inside. We're going to write the opposite, the corresponding entry. So that is purchase ledger control. So you're going to write purchase ledger control. That is 120. So I'm saying again how we do that. So you can see we have a journal. Purchase ledger control is a debit, discount received, credit. Now the first ledger account we have, this is for the discount received. And the discount received is a credit. So on the credit side, I'm going to write the opposite, purchase ledger control. Same like on the purchase ledger control account, I'm going to write the discount received. So let's move on. So the next one we have here, purchase ledger control, that was debit. So on the debit side, I'm going to write discount received 120 because I'm going to write the opposite. Thus, it is quite simple. And I think this is the end of the question. Yeah, this is the end of the question of this sample assessment. It's not very long, only 7 questions you're expecting in the exam. And obviously, you have to have a very good understanding the question we have done from the bookkeeping transaction, from the control and everything. And once you revise once again and everything, you hopefully will be fine because this exam are not very difficult. when you do the synoptic, that means by this time you already completed your transaction, your control, your cost management, and hopefully if you just quickly revise, you'll be absolutely fine for this synoptic level 2 exam.